Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Monday, October 14th, 2013. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. With that thought, let's take a look at the indexes as they were during the last week. Looking at the Dow, NASDAQ, S&P 500, we see that other than the NASDAQ, we had a positive week with all. Percentage change for the Dow up 1.1%. NASDAQ, the exception to the rule, down 0.4%. S&P up 0.8%. Russell 2000 up 0.5%. As the end of the week gave us the kind of strength that we were looking for after we saw some relenting taking place from Obama and, of course, some give taking place from the different representatives trying to find some solution to this debt ceiling that they are playing with our money with. Dow up 16.3% for the year, NASDAQ up 25% for the year, S&P up almost 20%, and Russell 2000 up 27.7%, continuing its lead in the overall race to glory. And then finally, looking at economic announcements coming up during this coming week, we see that Monday is a U.S. holiday. The markets are open, but the banks are closed. So what kind of announcements do we have? Zero, none. Looking at Tuesday, what do we have? Empire State Manufacturing Survey coming out at 8:30. And then on Wednesday, CPI coming out. Housing Market Index coming out. CPI before the market opens. Housing market coming out at 10 a.m. And then on Thursday, we've got more housing information. Housing starts coming out at 8:30. Jobless claims at 8:30, telling us what the last weeks did as far as employment numbers. Industrial production coming out at 9:15. And then finally, the Philly Fed coming out at 10. And then as we look at Friday, what do we see? We see economic leading indicators for the previous month coming out at 10 a.m. on Friday morning. So we've got some announcements coming out, basically much more powerful towards the end of the week, although CPI on Wednesday certainly has been known to move the market. As we look at the SPX, we see that we are in this what is a very, very slight uptrend. This high is higher than this high, and we see that this low is higher than this low, and we can almost draw a line from there showing us this channel that it's going in, but we're not really getting very much higher highs, and that's what we're headed up to, that previous resistance up there above 1725. So we saw a big move on Thursday of this last week. In fact, let's look at a little bit bigger chart, and we see that on Thursday we had this big move after we got that doji on Wednesday, and we saw that this talk that they had with Obama caused this to take place. So one could expect that if the trend continues, we should this week hit that previous high unless news overpowers everything. Looking at the Dow, we say it went down all the way down to the 200-day moving average. So the Dow was due for a bounce, and it's exactly what it got. Looking at the NASDAQ, we see it's nowhere near the 200-day moving average and showed good strength as the NASDAQ could be headed for higher highs on the first couple days of the week. Russell 2000, again, headed towards those previous highs. Nice big move off the 30-day moving average and heading higher. So we saw a nice move on Thursday and Friday with the news of them actually discussing and talking about the debt ceiling. When we look at the VIX, what do we got? Well, what would we expect? As the pressure goes off, as the pressure cooker lets off steam, what happens to the VIX? It goes down, being a contrary indicator, and we're down to a more normal level of 1572, which all took place on Thursday and Friday as we had that big gap down on Thursday morning in the VIX. Looking at the bonds, we see that they're kind of had a mind of their own, just going sideways. Didn't give us any big indication whatsoever looking at the movements that took place in the market this last week. Gold we talked about last week. We said that typically October is a pullback month, and sure enough, we broke down, headed for a lower lows in gold as there's no big move to that sanctuary of gold. And looking finally, what kind of volume did we get? Well, we saw that volume on Thursday was the strongest of the week, and we did show good volume on Tuesday, Wednesday, and Thursday. Friday didn't show us that same amount of volume, but a lot of volume taking place as we sold off and then turned around and headed back up. So we saw that the volume kicked in as we bottomed out and headed up. All right, next, looking at the financials, we see that the financials, which we expect would follow the overall market, that's exactly what they did, headed for those previous highs on XLF. All right, so looking at oil, we see that oil is not showing us much of anything. Look for a breakdown. If this breaks down, the next target's that 200-day moving average sitting down there. And there's potential for this week that oil could break down even further. And then finally, those of you that are gold members, stick around for stocks to watch, and we'll take a look at our golden stocks to see what they did during this week as we had a market bottom out and head for our previous highs as we saw a reversal take place toward the end of the week on the news of Obama talking with the Republican Party. So for those of you that are not gold members, stick around. Those of you that are gold members, stick around. Those of you that are not gold members, also stick around, and you'll see a website you can go to for other free videos from Options University. In the meantime, this is Butch Shorak. It's Monday, October 14th. We've entered what should be the best 6 months of the market, and this is Options University. Happy to be here. Thank you, ladies and gentlemen.